Great, thank you. All right, I'm going to go ahead and call this Municipal Audit Committee meeting to order. We are noticed today from 3 to 4 o'clock. Madam Clerk, if you could please call the roll.
Yes. Mr. Rivera?
Present.
Ms. Allard? Ms. LaFrance? Ms. Domboski?
I am here, thank you.
Thank you. Mr. Frisk?
I am here, and Molly Morrison is in my office with me.
Okay, great. Ms. Morrison?
Okay. You need to.
Yes, here, present.
Thank you.
Great, thanks everyone. All right, so thanks for joining on a Monday afternoon. I know this is typically not when we have these committee meetings, but seeing as the budget is up tomorrow, it has been tradition for as long as I have been on the body for us to get this audit wrap-up presentation before us before we consider next year's budget. So wanted to try to meet that timeline. Want to note for the record, we have been joined by Ms. Allard. Thank you. Okay, so we only have one item on our agenda today, the review of the FY20 Annual Comprehensive Financial Report. That will include the annual financials as well as the federal single audit. And I know there's a lot of interest in that one. So with that, let's go ahead and get started with our presentation. Who from BDO will be presenting?
Hello, Joy Mariners here from BDO.
Great, thanks, Joy. Go ahead, if you can go ahead and share the screen, your slides, and then for any members of the public, the agenda and presentation materials, including links to these slides and the full annual comprehensive financial report and the federal and state single audits. Those are all on the committee's website. If you just go to muni.org, to the assemblies page, and to the committee's page, you will find a link to all of that information there. All right, go ahead.
Thank you, Mr. Chair. Can you see my screen right now?
Yes, I can
Okay.
see your slides.
It was not working for a minute and I thought everything had frozen. I was a little bit worried. So I'm happy to be here with you. So for those of you I've not met, I think I've met all of you before, but Joy Mariner here. I'm the office managing partner of the BDO Anchorage office, and we serve as the auditors of the municipality of Anchorage. I have worked on your audit to some degree for, gosh, maybe 13 years or so, but I have took over as head partner, lead partner on this particular audit back about 2 years ago. Previously had a different partner, but I'm happy to be working back with the municipality the last 2 or 3 years. And so what this is our required communication to you as the audit committee. We do work for the assembly ultimately, really for the mayor and the assembly, but for the public as independent auditors. Our job is to come in and do an audit of the books and records to make sure that things are presented in accordance with generally accepted accounting principles. We follow generally accepted auditing standards, but also the municipality receives federal and state grant awards. So we also follow government auditing standards, which are a more robust form of auditing standards, requires additional training and additional procedures that we perform. We also perform an audit of the water utility, of the wastewater utility. We also perform audits of lots of various things, but the biggest other audit we perform is related to your federal and state grants. It's called a single audit. So I'm going to do kind of a brief summary on the audit wrap up of the results of the audit. You should have received a link on your page for the audit committee to the financial statements, which have been available for quite some time. That's the first link on the audit committee website. There's also a link to your single audit report that was issued after the original financial statement issuance. And then there's a link to our report to the audit committee, which is what I'll start with. So the financial information that we audited is for the year ended December 31st, 2020. And, just the first thing I'll kind of mention is the status. So the audits are completed. We issued an unmodified opinion there in the fourth bullet point on the financial statements. We released that report at the end of September. And then we released an unmodified opinion on compliance for your federal and state compliance audits. And that was released at the end of October. So this year was a really unusual year in a lot of ways, with COVID-19 and all of the additional funding and activity that came along to it. I will say that, some governments ended up hiring different companies to come in and help them get that money out the door. And there's a significant lift because your team really didn't outsource. Most of the grants that were given and most of the programs were managed internally by the municipality. So a big lift for the controller division as well as lots of other departments as a result of all the additional funding streams and the activities going on. So the last bullet point is really appropriate here. I realize the opinion is not issued, in July as hoped, but their team at the controller division was excellent to work with all along the way, fully cooperative with all of our requests. We ran into a few bumps along the road and they just did an excellent job of making sure that things were handled well. And one thing I will just say is that, we had one comment that we'll talk about that was reported, but we didn't find any exceptions to testing in terms of the actual dollars coming in the door or the dollars going out the door in our audits. There were a few entries that were recorded and adjustments that were made, but I will just say that, for this year with the volume that happened and the change, that is very excellent. One thing that we did note that is just important for you to hear is in 2020, a lot of controls changed, and we'll talk about controls, but 2020, all of a sudden people had to go remote. You had to work in the IT system. There were a lot of changes that happened and they happened very suddenly. So for you to come out on the other end of this with only one item that doesn't have anything to do with a spending error is really pretty excellent. And your team really went above and beyond this year. So let's look at a few results. So no major changes to your accounting standards this year, no adoption of new policies or practices. For 2021, though, you will be implementing a new lease standard. So just know that when we're talking about 2021, there will be some significant changes coming as it relates to leases, which you have to now record all leases coming up into the 2021 financial reports. Your financial statements, which are available here, as I mentioned there, the financial statements do have certain amounts that are not hard and fast dollars. So when you're budgeting, you're typically budgeting for actual cash outlay, what you expect to actually pay during that year. So for example, you budget for debt payments, principal and interest portion of debt. But there are certain types of expenses and liabilities that are recorded in your financials that are estimates. So I have these listed here just because it's important for you to be aware of that. These are things that are not specific dollars in the bank. It's based on what your best estimate of those liabilities or assets may be. So your first one is allowance for uncollectible accounts. Generally speaking, your accounts are very collectible. The utilities have the ability to do shutoffs to collect money. You have certain provisions in your property tax code that allow for recovery eventually of any overdue receivables. Most of your other smaller receivables, generally speaking, people pay their bills. And so there's some degree, a small amount of allowance that is recorded just to estimate how much won't get paid. And then generally, like grant expenditures tend to get paid. People tend to pay their bills there, with few exceptions, although there are a few of them. The pension liabilities, as always, are established by the state of Alaska actuaries. So you really don't have any control over what the pension liability is. Although we do audit the estimates that the actuaries are using for that PERS liability and the OPEB liabilities. But that's a liability on the books of the municipality that you can't pay off. It's not as if you can just turn around and send that money to the state of Alaska and the liability goes away. We did see a decrease in those liabilities this year, primarily related to investment performance because the markets did perform well in the current year. The next one is IBNR, and this is for your self-insurance. So you do have a certain amount of kind of a claims liability inherent in your financials because you estimate the amount of claims that have been incurred, but you haven't yet received the bill for them yet, not yet reported. The fourth one here is your landfill closure. So the municipal landfill does actually have a liability associated with its closure. There's certain capping and environmental follow-up that has to come with the landfill. And you have a lot of years left on your landfill, or our landfill, I should say. I live here in Anchorage. The landfill has a lot of years left, but certain activities require closures along the way when cells are closed. And then ultimately when the landfill someday is capped, there's a cost for that. So that estimate is done by engineers, and you incur a little bit of a cost every year so that at the end of the life of the landfill, the accruals have already been made and the expenses have already been set aside for the closure of the landfill. And then the last two are really estimates about just types of liabilities that may exist. So environmental remediation, there's certainly inherent in running a municipality. There are certain environmental rules that you have to follow and some remediation activities that have to occur. The last one is just asset impairment, if you have any impairments that could have occurred. And I have this one in here because this is something that was looked at in regards to the earthquake. But if there are ever any, future events that might impair your assets, that's something that we evaluate every year. Questions on the estimates before we keep moving?
I don't see anyone in the queue right now. Thanks.
Okay. Yep. So when we look at the financial statements, I will just briefly touch on a few items in the financials here in a moment, but we'll talk about significant policies. We already talked about the fact that there were not major changes this year, and we just talked about estimates. Significant unusual transactions. There are two. The one is COVID, and nobody wants to hear that anymore, but it is a significant event that caused some pretty significant transactions at the municipality this year, primarily as it relates to grant funding and response costs. The second was the finalization of the sale of ML&P that occurred in 2020 and is disclosed on the financial statements as a special item. So it's very specifically called out on the financials. Otherwise, the financial statements have lots of disclosures in them. So if you ever need to go back to the financials for review, they'll be available to you. The financials are one of the only things that you kind of keep in perpetuity, at least for the life of loans. So typically you keep a financial statement for 20, 30 plus years. 30 years from now, somebody might go back to your financial statements to find out some information. How much was spent on this type of activity back in 2021 or 2020? And so I think that it's very important for you to understand that this is really a record of what happened in 2020 and is something that will be kept for a long time. So it's a good reference tool for you as an assembly member. If you have a question about, hey, what were we doing with this, or what was spent in this area? It's summarized for sure, but there's a lot of information in there for you. No new accounting pronouncements this year, although we did as a firm adopt a new auditing standard. So you'll see a little bit of a difference in the opinions that we issued. And to our knowledge, no alternative accounting treatments. You're following the generally accepted accounting principles as they stand. Otherwise, in terms of the results of the audit, one of the things that we report to you are things that we identified as adjustments. So your team goes through and closes the books and records, does all of the, the closure activity, reports to us what they believe their numbers to be, and what they also have on their federal and state schedules. So this year, the main item that we identified and worked with your team on was related to the FEMA revenue. So FEMA is a weird animal, and maybe you know this and maybe you don't, but FEMA is a really tricky one. And it was made trickier by the fact that this pandemic relief money was all just kind of rolling out very quickly without a lot of guidance to it. Specifically to FEMA, there were actually two pots that we're talking about here, one related to the earthquake and one related to COVID. And so some of the earthquake monies from 2018 and 19 still hadn't been recovered. And with FEMA, you don't report it until you actually have the approved project worksheet in place. So there are some expenses in 2020's single audit and in your financial statements that were actually spent many years ago, but they're finally getting kind of committed or obligated by FEMA. In addition, there were some COVID costs that you had approved obligations for. FEMA had agreed to pay you for them, but they hadn't yet been finalized. And this is where it gets really tricky because FEMA changes their mind a lot. No offense to FEMA, but there's some times where they say, yes, we'll cover these costs, and then later on they come back and they end up not covering them. So it's very difficult to determine how much FEMA is going to cover until you're actually paid for it. And this was a misunderstanding about the application of the accounting principles here. Do you record that when it's reasonably certain of collection or when you have collected it? Or do you record it when the cost is incurred under a funding obligation? And so your team was taking a conservative approach. They were recording the revenue when it was certain of collection and really when it was paid, versus recording the revenue when the obligation was approved, but before the costs had been fully reimbursed. And so I am thankful as a citizen that they were recording things very conservatively, but there was additional $8.6 million of revenue that was not recorded into 2020 that did relate to 2020 expenses or prior to. Some of those were actually earthquake expenses. And in fact, there was a FEMA approved obligation. However, not those funds weren't actually paid yet. They were paid in 2021. And there were actually even more costs than that weren't paid, but because they weren't paid within about 6 months, they're not reported in 2020. So you'll see some 2020 costs even showing up on your 2021 financial statements. So that was about $8.6 million of additional revenue that was recorded into 2020. This was identified sort of late into the spring and summer, and that was really the reason for the delay in getting the financials out, because the financial statements didn't have $8.6 million of revenue that it needed to have. And so the call was made by your team kind of in late July. No, we want it to include all the right amounts, and to take the time to figure out what that amount was. And certainly from your auditor's perspective, from my perspective, it was important for us also to make sure that the amount reported and added related to FEMA was reported correctly. There were a few other adjustments that were made to the federal and the state schedules. You note those, I think those are fairly minor in nature. And then there were 6 adjustments that were not recorded by your team. And you can find a detail of those at the end of the wrap up if you so choose to look at those. Most years we have these. Majority of them relate to the, and I'll just pull it up while I've got it right here. Majority of these relate to the water and the wastewater utility fund, because they have some differences in when they close their accounts payable. So they close their books and records, and some invoices kind of come in late related to capital outlay and capital assets. They end up being very much mostly a wash from an income statement perspective. They don't seem to have any regulatory impacts, and so they don't typically book those. There was one other uncorrected misstatement related to a reclassification on your equity. This one thing you should hear from me is this is only on a government-wide level. Fund level statements are just fine. And it's really just a reclassification from one category of restricted versus unrestricted, or invested in capital assets related to unspent bond proceeds. Again, the way your team has it recorded currently, I would consider to be more conservative. And I don't believe that would cause anybody to make a wrong decision about the activities of the fund, of the municipality as a whole. The last one just does again relate to the FEMA reimbursements. There was about 1.3 million of revenue that was not recorded into the state grant special revenue fund this year, just because of the timing of the adjustment itself. But as I said, the full 8.5 million was recorded entity-wide. So hopefully that makes sense. Felix, I see you have a question, so I'll stop there and answer what questions you have on that.
Great, thanks. So yeah, definitely, the Assembly is very interested in FEMA reimbursement and what's going on with it. So if I were to just try to summarize what the error was, it wasn't necessarily that someone made an error in accounting the reimbursement that we got from FEMA, but it was rather because of a policy choice that there's a timing issue. And so is that one correct? And then if that is, then is this something that we should expect to see pretty much in every audit going forward, as long as we are dealing with significant amounts of FEMA reimbursement?
So it is correct. It's a timing issue and really a misapplication of policy there. From my understanding, and Travis, Molly, correct me if I'm wrong, the municipality has changed their policy, which is why this was recorded, to be in line with the requirements and the guidance given by FEMA. I will say that, again, FEMA can be a bit unpredictable. So even now, we know that some of that $8.6 million will end up not being covered by FEMA, even though they paid for it. So there's always a bit of a back and forth with FEMA and making sure that they really take a very detailed approach to review of costs, which is great. But the policy at the municipality has changed, it's my understanding, such that that error should not continue into future years. But it's just a timing issue. We did not identify any costs that were unallowable or misapplied. The costs were fine. Again, money coming in the door, out the door, okay. It's just which period it was reported into.
Okay, great, thank you. So then I guess my follow-up on that would be to Mr. Frisk. So just a couple of questions. One, can you confirm that policy has been changed? And then two, I know Mr. Frisk, you warn us about FEMA reimbursement quite often. Would anything that was found in this audit change any of your calculations that you have brought forward to the Assembly recently? Thanks.
Mr. Rivera, let me answer the second part of that question first. No, I'm still sticking with what I'm saying as far as reimbursements from FEMA. I think Joy has actually reinforced what I have been trying to explain all along, is that FEMA can change their mind even after they paid you. So it's a scary situation in that the person that controls the money flowing back to you controls the rules that go with what they think is eligible reimbursements or not. So there's not a clear, defined, established guideline that they adhere to 24/7. It is an ever adjusting and moving target. So that's why I've kind of been preaching all along since I've been here for 5 months, is that we need to be very careful and conscious about this and not make a blanket statement that we're going to get fully reimbursed.
Great, I appreciate that. And then can you just confirm about the policy change?
And thank you again. I'm going to, Joy, can you elaborate? Because I'm sorry, I didn't catch exactly everything you were saying on the policy.
Right, so the accounting policy change was actually implemented with the 2020 audit, which is what resulted in that adjustment. But the policy, Felix, is that the revenue will be recognized when the expenses incurred under an existing and approved funding obligation from FEMA, assuming the reimbursement was received within 6 months. So that's kind of the guidelines for recording the revenue in the fund itself, in the state grants special revenue fund itself. But then also your team is tracking overall how much FEMA owes you under an existing funding obligation for costs already incurred. So as long as the cost is incurred and FEMA has approved a funding obligation, then the revenue is recognized.
Thank you, Joy. And Mr. Rivera, that is correct. That is a change that was implemented since I've been here. We did go with the guidance from BDO on the appropriate way to recognize the revenue based on when the expenditure happened. Just, I couldn't have said it any better than what Joy just did, but it's exactly what we changed to make sure that we're in compliance with more acceptable standards at this point.
Got it. Great. Thank you for the clarification. Okay, I don't see anyone else in the queue. We can move on.
Thank you. The only other recommendation, and that's actually gets me to the next slide here, is related to internal control. So when we have an adjustment such as the FEMA one, we take a step back and say, okay, what control in place? What's the checks and balance policy in place to prevent or detect an error from occurring, right, before it happens or before it gets reported? And so for this particular item, as it relates to FEMA, we did report this one. And our recommendation here is twofold. One is we recommend that there's better review of just the policy or the recording of the revenue itself. But the thing that we did actually see that was interesting is there was a difference in the way the reporting structure worked under the earthquake money versus the COVID money. The COVID money was very centralized, and the grants department was very involved in the COVID money and the way that that was reported. The earthquake money was very decentralized, and many of the different departments were filing FEMA claims separately as it relates to the earthquake. So the one recommendation we just had out of that, and this is sort of not just related to FEMA, this is just generally speaking, it's very important and it's a best practice for all of your grants to funnel through, even if the reporting's done by a departmental level, they still funnel through the grants department, through one kind of central location in the controller division. And I will tell you the times where I've seen significant findings at many of my clients, it's because somebody else decided they could operate a grant on their own. They could apply for, or they could manage, or they could report under a grant. And they just said, well, I don't want to deal with accounting. I don't want to bother with that. I'm going to do it on my own. So to the extent that you're aware of any grants or somebody who's interested in doing a grant, it's always better to involve the grants team at the controller division on the front end before you even apply for it, ideally, but at least before you accept the grant. Make sure it's on their radar and there's a reporting structure in place, because that's what they do. And I was talking with your grants team just recently about that, and it's not gotten easier for them with all these new grants. It's one thing where you have the same grant and it has the same rules and the same reports every year, but your team's been hit with lots of different weird grants over the last couple years. So it's very important to make sure that your grants are centralized, at least in terms of the accountability piece, because that's who it ends up falling back on, is the controller division for reporting of the total amount of grants spent municipality wide. So that was something actually improved from the earthquake to COVID. So that was really encouraging. I'd like to make sure that just that you hear that's important that continue just with other grants, not just with FEMA. We did identify a few other things. So there's 3 levels of control deficiencies. One is kind of like a business suggestion. So it's a best practice, something you might consider changing, but we don't think you as the assembly need to take action on it. A significant deficiency is, hey, we want you to be aware of it. It merits your attention. But it's not a material issue, meaning we don't think it could cause a material misstatement in your statements themselves. So this FEMA issue was identified as something that merits your attention. These other items that we listed really just for your benefit, but we don't believe these to be significant deficiencies. These are items that we think should be looked at, but not necessarily needing your involvement. We did discuss them with management. And they do really relate to access controls and user rights controls within your IT systems. I'll tell you, most of my clients have a handful of these. It's not unusual. And it's really about who has access to do what in your IT systems. You have a lot of IT systems. They are very complex. And so we did have a few suggestions for your IT teams in SAP and TeleDriver and in TeleStaff. And then the last item is what I mentioned before, where we did identify one bond proceeds related difference in your net position. Again, it's just between 2 categories. there's no impact to your bottom line as a result of this change. And I believe that the plan is to implement that change in 2021. Other things I do need to tell you about, if we had difficulties, disagreements, if we needed specialized skills, if we had significant changes, nothing like that this year. These are all fairly boring pages in your wrap-up, which is great. We do use IT information systems auditors. They're specialized in auditing IT systems. And we also use our pension actuaries to review the state pension system, as well as the police and fire retirement system and OPEB plans. So they take a look at the assumptions and the process for estimates as it relates to your pension and OPEB balances. Otherwise, when we just look at here, no difficulties or disagreements with your team. We had some delays just waiting to finalize the FEMA money, but otherwise things went very smoothly. We are an independent accounting firm, so as public accounting firms are required to maintain their independence. I work very carefully, I'm very careful, and I work very hard at making sure that I remain an independent auditor. So it's very important to me. We do work for the municipality as a whole, for the assembly and the mayor ultimately, but we are really accountable to the public and to the citizens of the city. So I'm happy to be a citizen of the city because it really does matter to me that things are done the right way. Included in this is a copy of the letters that your team signs at the end of the audit. That's required to be given to you, but I won't go through those. And then I want to just spend a couple minutes, if you'll allow the time, to cover a couple of highlights in the financial statements themselves. And Mr. Chair, I'll defer to you as to timing, if it's okay for me to go through a few highlights on the financials.
Go ahead, we have time.
Okay, thanks. So the comprehensive annual financial report is for the year end December 31st, 2020. It's almost a year after that, so I would hope you're making your decisions on budget based on what information you're getting now, not based on this information from a year ago. But there's a lot of information in here, and just if you glance at the table of contents, there's information about your org chart, your principal officials, map of the municipality. There's a financial section which includes our auditor's report and the management's discussion analysis and the basic financial statements. One thing I'll say as an assembly member that you should consider is really reading through the management discussion and analysis, because this is almost like an annual report. It gives you the information about what happened last year and what happened this year and why the change. Also included in the financial statements is a bunch of additional information about your pensions and your funds. These are all just detailed information about your funds, which is helpful information if you ever want to dig into detail. And then the last section I'll highlight here is your statistics. And the statistics is the other section I recommend you as an assembly person take the time to peruse, because this gives you some great information about how property taxes are used, or the sources, principal property taxpayers, what revenue you've pledged for your debt, principal employment. It also gives you a 10-year history of what's going on in your governmental funds and your charges for services. So the statistics at the end are very useful information. Let's jump really quickly to the auditor's opinion, and I'm moving along quickly. Hopefully you can see my screen, but I'll try to reference the pages. So on page 17, which is actually page, I believe page 1 technically, but page 17 of the PDF, this is our auditor's opinion. So this is actually what you're paying us for. This whole document is something like 250 pages long, so it takes your team a lot of time to put it together. But our section is only 4 pages of this. So the financial statements actually belong to your management team, to the municipality as a whole. They're not our financials. Our job is to report on the financial statements and whether we believe them to be fairly presented. And our opinion is right here at the beginning of this opinion letter. This is a change from last year. It used to be hidden on, say, the 2nd or 3rd page, but right now it's they've changed it so the opinion's right at the beginning. And in our opinion, based on our audit, the accompanying financial statements present fairly in all material respects your financial position is really what this is saying. So this is a clean or unmodified opinion. We do not audit the Police Fire Retirement Trust, so we just refer to another auditor who audits that information. But we do audit the school district and your other component units. We did conduct your audit in accordance with generally accepted auditing standards and government auditing standards, which, as I mentioned before, are a more robust auditing practice. And then there's some information in here which I think is helpful on page 18, about what our responsibilities are in the financials versus what your responsibilities are in the financials. So your team is responsible for the statements themselves, as well as the implementation of internal controls. So an audit is a great control, but it's an external control. We are external to the municipality, and I see Mike's here with us. Mike's your internal auditor, and he is an important part of the internal control system that you have in place. And in fact, we review the reports that the internal audit department and Mike issue during the year to see if there's anything that's flagged that we need to be paying attention to as well. So we read through all of those reports that he gives you. But our responsibility is to obtain a reasonable level of assurance, not absolute assurance. You do not want us to audit every transaction there at the municipality because you don't want to pay for it, let me tell you. But we do employ a risk-based methodology. So we are identifying risks. This year, CARES was a big risk. There's a change in the way that a lot of the controls were performed because you couldn't be in your offices as much. So there was some risk associated with remote work this year. We're also required to understand your internal controls and evaluate the appropriateness of your policies. And then, communicate with you anything we found, which is what I just had done. So the MD&A starts here on page 21. Again, if you read nothing else, this is about 12 pages long, and maybe it's a little bit more than that now, 15 pages long. But I think 15 out of 254 pages is well worth the effort. As you can see in the MD&A, it actually gives you historical information about what you've got in assets and liabilities, as well as an analysis of what changed from last year. What caused those changes, and some of the information that you may want to know about the financials. I'm going to skip ahead to the statements everybody cares about, which are actually your statement of net position, and this is and the basic financials as a whole. And I'll just take a couple minutes to introduce you to these and highlight a few things. Again, I'd really encourage you to dive in more detail. And most of these numbers should not be very surprising to you since these are almost a year old. But if you look at your just general overall position, your total assets this year, this does not include your component units such as the school district. The other component units are here, the school district, ACDA, the PAC. But if you just look at the municipality, your total assets now are about $6.2 billion. And you hopefully are not surprised to find out that most of that is actually invested in capital assets. These are buildings and roads and utilities and all of those things that make up the infrastructure and the capital of the municipality. So about 4.9 million of that 6.2 million is in capital assets. A significant portion of the rest is held in cash and investments, either in the central treasury itself or in the permanent fund. You also do have a significant new receivable for the installment sale of the electric utility. This is the MLNP portion of the long-term receivable associated with the sale of MLNP, and that's new this year. So things that you own are assets. You just have a lot of assets that are held for various reasons in cash and investments in it. And also, for example, you have to have a cash reserve for the landfill. That's a requirement of DEC. So when you look at your liabilities are things you owe to others. And again, hopefully no surprises here. Your largest portion of liabilities is actually related to the debt that the municipality carries. These are your revenue bonds, your GO bonds, and your AEDC debt, along with a few other types of debt agencies or debt securities. And then your other big liabilities here are your pension and OPEB liabilities that you have very little control over. as well as contributions in aid of construction, which relate to the amounts that utility payments that have been received from customers for construction. So if you were to pay to run a line to your business, for example, it gets recorded as a contribution in aid of construction on the balance sheet. So that's that. So out of your total $2 million of total liabilities, most of that is wrapped up in your bond and loan debt. And then you do have some other deferred inflows. And then what's left over is your net position. And most of your net position is, this is your equity here at the municipality, is most of it's tied up in those capital assets, or it's restricted for various purposes, whether it's restricted for use in construction or debt service, or you have some amounts of reserves for the convention center or the landfill. This is the MOA trust. And then overall, we do show an unrestricted deficit. Mostly that is related to the fact that the pension liabilities are being recorded, even though you cannot pay those off in advance. So you're recording the full amount of your pension liability at this time, even though you're only paying that 22% contribution rate. I think a better picture of your kind of equity position is actually when you look at the fund level. And so if you look at, for example, at the general fund has cash and investments, just so we would expect, and certain amounts of liability. But overall, the general fund has a total fund balance of just under $100 million. A lot of that has already been committed by the Assembly for various purposes. So that's what committed is committed by you as an Assembly. And so you have shown a deficit or an unassigned deficit in fund balance because you have committed a significant amount of the general fund balance at the end of the year. But overall, the governmental funds here, total governmental funds, do show a deficit in fund balance, which is something I think is worth taking a look at as an audit committee and looking at as you're planning out your budget for next year. And the other thing I'll just point out that you can look at later is your expenditures and revenues. That's going to show up on a couple places. Page 32 is your governmental funds. And you can see here where your total governmental funds change was actually an increase in fund balance of $272 million compared to the prior year. So a definite increase from the prior year. Keep in mind that, this is a picture of all your governmental funds as a whole. So there were a lot of different changes in here. One thing I will note in particular is related to the issuance of bonds. So you did issue $44.72 million of bonds, and as well as a refunding bonds of additional $59 million. So a lot of activity in public finance this year, and that was did realize a pretty significant savings. The last page I'll kind of point out here is actually down on page, give me 1 second, 54, or it's page 38 of the financials if you've printed it out. And this is going to give you the revenue expenses for your utilities, electric, water, wastewater, port. The following page also has your non-major enterprise funds, but I'm going to focus here on this page. The electric utility did operate in 2020 for 10 months, so you do have a lot of revenue and expenses still. One thing I'll point out here is this big special item for a gain on disposal. So this is essentially the net amount where everything was closed out of ML&P. There was a gain at the end of the day of 6.356, as well as a transfer out of ML&P of 285 million. So that was the main change that you see here. But the water and the wastewater utility overall are maintaining an income of and a return on the investment the municipality has made. The port is showing a loss at the end of 2020. And one thing to watch out for there, though, is that does include depreciation, which is a non-cash outlay item. Doesn't mean you shouldn't try to recover depreciation in your charges, but the total port cash flow was positive. And I'll just shoot that number really fast at you. overall, the port did generate $5 million in cash from its operations, even though it's showing a loss. So I know that's a lot to cover in a short period of time, but those are the main statements I wanted to cover with you as it relates to the financials. I'm going to pause and answer any questions on the financials before I spend about 2 minutes on the single audit. Any questions on the financial statements?
Thanks. Are there any questions? Okay, not seeing any. We'll go ahead and move on.
Thank you, Mr. Chair. So the main page I want to cover on the single audit, there aren't that many I want to cover. One thing I'll note is your total federal expenditures this year were $234 million. So that's a pretty significant increase from 2019. And this is primarily related to COVID money. So your federal schedule is actually about, goodness, now it's about 8 pages long. There's a lot of information on here related to your federal grants. Your grants team sure has a lot to cover. You can see in the FEMA category here on page 13, the total FEMA grant assistance here of 14 million. This is just the federal portion. There's a 25% state match that goes with it. COVID was 3.44, and then you have the earthquake, which was 10.65. Also included on your federal schedule are the monies that you've received as a result of the CARES Act, and there are actually several different tranches of money. You may be not aware of that. You did get a little bit of money from the Airport Improvement Fund, actually related to the CARES Act, and a little bit into transit as well. So $1.76 million in transit related to COVID. And then you're going to see some amounts coming in. It's a very big schedule. This is the big one. Department of Treasury, Curtivirus Relief Fund, $155 million. So we did audit the use of those funds based on the ultimate use of it, not necessarily the process. We just audit what was ultimately allocated as spending under that grant. And so we did not identify any findings as to the use of that funding during 2020. And then on the state side, the state schedule starts on page 26. Total state awards equaled $92 million this year. Again, FEMA is a very big piece of that, as well as a bunch of roads program money and additional money for health services and your, kind of your general public health nursing type of monies that you typically received. This is the FEMA money that you've received from the state. And then the last page I'll cover on here is really related to just a summary. And we've been through all this already, but as a whole, we did issue an unmodified opinion on the statements. We identified the one item related to FEMA that we reported to you, and it merits your attention. No findings related to federal awards, and we audited 4 federal major programs this year. That's fairly unprecedented for you. 4 programs, including the Coronavirus Relief Fund, your state revolving Clean Water Fund loan, Public Health Emergency Response, and that's also COVID related, and FEMA. We also audited your state awards. Everything over $500,000 was audited. And then if you want to go through and read through the item that we did identify in more detail, we covered it in the internal control section before, but this is more information about it if you wanted to dig into it, as well as our recommendation that, amounts need to be kind of completely reviewed by the end of during the course of the review of the subsequent grant receipts to make sure that the federal schedule and the state schedule are complete. So with that, I'm going to stop sharing my screen and pause for any other questions.
Great, thank you. And thank you so much for a very thorough and great presentation. And thanks to all of the municipal staff who put in countless hours of work. So I do have a couple questions, not seeing anyone else in the queue. So first on the Coronavirus Relief Fund, this particular committee has expressed interest in making sure that the usage of those funds have been audited, and it sounds like BDO did that. I'm just curious, you said ultimate use of those funds. Could you just describe a little bit about sort of what standards BDO used? For example, was BDO able to determine that, yes, we used these funds appropriately, no, we did not, or was that at all part of what BDO did?
Absolutely. So we followed the federal single audit requirements as it relates to a major program, and that entails us understanding the program itself, identifying how it was used at the municipality, and then going through and identifying what are applicable compliance requirements. So the federal government tells us what they are. They tell us, in your case, we needed to audit allowable costs, allowable activities, which are really one, the period of availability, were you using it in the right period, applying the costs from the right period to the award. We also needed to look at subrecipient monitoring, any monies that were passed through to other agencies or nonprofits. And then lastly, reporting. We did have to look at whether or not you were reporting the costs to the federal government properly and in line with what you ended up spending the money on. So as it relates to reporting, that's pretty easy. It's just a report you filled out and we audited that. Subrecipient monitoring, there were a lot of grants that were given out under lots of different grant programs, as you are aware. So some of those were considered to be beneficiary payments, meaning you gave a business or an individual a grant as a beneficiary. They just got the money. There weren't any continuing compliance requirements. They were not required to turn around and spend the money necessarily on specific things. They qualified because of eligibility for your program. But then there were some grants that were given to nonprofits or to, HFC, I think, helped with your housing. I'd have to look up specifics there, but, certain of your grant programs were considered to be subrecipients. So we did test a sample of those to make sure that your team was tracking those and monitoring those properly. And then probably the biggest section of our audit was auditing the expenses themselves. So every dollar that was spent under CARES or under CRF had a chance of being selected as a sample. But we kind of separated things into different categories. We did payroll costs, non-payroll costs, grant costs, and then allocated costs. So, each one of those categories, we selected a sample based on the federal guidelines. Sometimes it's a sample of 40, sometimes it's a sample of 60, and sometimes it's a sample of 10% of the transactions, just depending on how many you had in each category. So we didn't test every cost, to be sure, but we didn't identify any exceptions to our test work in the ones that we did select for test work in those areas.
Okay, great. Thanks for that. So I want to make sure that we have enough time just in case there are any other questions. I have one more question for BDO and then one for the administration. So I'm wondering if we could extend 10 minutes with the hope that we can get done before then. So if I can get a motion in a second, that would be great.
I'm sorry, Felix, I have a 4 o'clock that I won't be able to stay for.
Okay. Thank you, Ms. Domboski. All right, if we can't go past 4 o'clock, then that's fine. We'll get it done quick.
Mr. Rivera, this is Travis. I also have a 4 o'clock. I've got to go to.
Sure. Okay, well then we'll go ahead and just, I'll wrap up by just saying thank you so much again to BDO and municipal staff for all of your work on this. So I will go ahead and just open up audience participation. If there are any members of the public who would like to participate, now is the time. If you're on the phone, please press *6. I don't think I'm seeing anyone. Okay, not seeing anyone, then I will go ahead and adjourn the meeting, and thanks everyone again.
Thank you, everyone.
Thank you.